Good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the senior strategist for 𝗧𝗴𝗀𝗲. Today is September 22nd, 27th, not 22nd, 27th. And boy, oh boy, we've got a lot of goodies this week. I mean, the Fed decided to give us a lot on our plate. We've got durable goods. We've got consumer confidence. We've got, where is it here? GDP, the biggest report of the quarter, jobless claims. We've got consumer sentiment, personal income. We're going to have a really good idea of where the economy stands by the end of this week, especially where retail sale is, because consumer confidence and consumer sentiment and GDP give us a really good idea of where the economy stands. We're going to have a much better idea by the end of this week if Fed is going to take any action and raise or lower interest rates. Now, here's the kicker. They're not going to lower interest rates. We already know that. So there's some type of a ceiling here, because here's the thing. I mean, it's not a real ceiling. It's a virtual ceiling. But if we know they're not going to be lowering rates, and if we know they're going to be taking action soon, as they said, which could be as early as next month. And remember, if interest rates are not going higher, if they're not going lower, if they're only going higher, that means bonds can only go lower, because there's an inverse relationship. So every time bonds rally, it's a good time to sell them. And I'm watching them carefully, and I'm watching them to see if they're going to go back up to the 151 level. I actually got out of the short right around here. We made about 25% for our traders, but I should have kept it here. There's another 25% here. But anyhow, I'm waiting for bonds to go higher so we could sell them again. I think once we break through, we're going to be going to the downside. But I'm very bearish on bonds because I'm very bullish on interest rates, and I think the Fed is going to take action. And I think the GDP, coupled with the consumer sentiment and the construction spending and manufacturing index, is going to give us a really good understanding of how inflation is impacting the consumer, whether it's impacting retail sales. We're going to know if the supply chain issues are still hampering us. It's a really good week for data. In light of that, the S&P is all over the place. S&P's down 4, Nasdaq is down 83, the Dow is up 61. That's one hell of a random market, right? There's just not a lot going on, and everything's all over the place. So we don't want to read too much into it because there's just not much certainty with this data. But here we do have some certainty. If you look at the Dow Jones, we're still struggling to get above the 50-day moving average. We're still in the twilight zone, which explains why the markets are so fragmented or so out of whack, because we don't know where we're at. And if you look at the QQQ, we're now above the 50-day moving average right here. And the question is, are we going to trade higher? Now, if we can trade above these levels, we're bullish. But officially, we're bullish in the Nasdaq. And let's see if we're bullish in the SPY, or if we're not bullish yet in the SPY. We're still on the 50-day line. But it looks like the QQQ, for the most intent purposes, is above the 50-day line. I mean, you could wait for another day, but there's a buy here. If we trade above the 374 level, there's a buy there for sure. Now, put the call ratio, nothing really. I mean, it's on the cusp, but based on what we saw last week and after the sell-off, the fact is it's going lower. It's not going higher. So if we go above this level, it's going to be a big deal. But if we stay right here, and I think we will, we're just going to revert back into our window, which is right here. This is random. Anything above or below is not random. So you can see we're right on that cusp. So far, based on everything we're seeing, the market is falling back in line. Volatility via VIX, this is the volatility on the S&P 500, is now below 20, which is a threshold. So volatility threshold is 20, and we're below 20. Put the call ratio, threshold is 1, and we're right at 1. So it's kind of one of those things. But bond market is down. The Nasdaq is, again, as you saw, the market is kind of all over the place, so we really can't gauge the market just yet. But here's what I will tell you. If you look at the major indices, the consumer discretionary sector, which is the most speculative sector aside from technology, it's actually more speculative than technology because it has retail in it. It is abutting those highs. Matter of fact, look at this long-term chart. We're almost at the highs. That's very, very positive. And if you look at my 10, where is it here? I lost my 11 sectors. I keep saying 10. If you look at my 11 sectors, you will see that technology and consumer discretionary are in the top spot. So according to everything here, the market did gain some elasticity and is not fragmented anymore because tech and consumer discretionary are next to each other. You got real estate, health, and financial next to each other. Consumer staples is very close to utilities, and industrial and basic materials. Basically, they're not all that far from each other, and these are defensive sectors. So the fact that tech and consumer discretionary is above, and the fact that there's pretty much consumer staples is one of just, you know, they're not next to each other, but they're not all that far from each other. So, but this is key. That means the market is rocking and rolling, and that means that pullback gave us what we needed. But as you could see here, the bond market is near the low end of the range. We've got a lot of Fed data. And remember, anything that's telling us that the COVID situation is not in check, and it's not anything that's telling us that the world is running amok, China is still a problem, it can cause the bond market to rally back up to its channel. Anything that would cause the Fed not to take action next month or in December, maybe January, would cause the bond market to rally. But it's not whether the Fed is going to lower rates, it's when they're going to raise rates. And again, consumer discretionary is looking good. You still have fragmentation. As I showed you in the Dow, you still have fragmentation. And look at the mid-cap. You still have fragmentation in the mid-cap. The mid-cap is just barely above. It's still kind of in the twilight zone. So I'm still expecting a very choppy market. Even more so, or did I say even? Is that a right word? Even more so, or moreover? Moreover, there we go. Proper English. Look at the number of stocks making 90-day lows, 90-day highs. It's equal, and it's not that high. It's not like 300 versus 50. So the market is still rather choppy and unidirectional or non-directional. So the fact that that's the case is telling me that instead of focusing on the strongest stocks, and I'll talk about stronger stocks as we get ahead of the week. Monday's not a good day to go long, actually. It's not statistically the best day to go long. Friday's not a good day to go long, and Monday's not the best day to go long. But I do have some shorts, and I like these shorts. And again, as I said, even if you're going to go long, and even if the market's going to sustain above 50-day moving average, you want to have some exposure to the short side. These are three stocks that are breaking down, and I think we're going to see more of a breakdown. I mean, look at this. We're breaking lower. We're at the 50-day line. I think the stock, 𝗧𝗴𝗀, is going to go all the way to 40 from the 44 level. I'd be selling it right now. Again, this is not a strong directional market. Merck hasn't been doing well. Merck has been doing pretty bad, actually. It peaked out all the way, let's see here. It peaked out all the way back in, let's see, when did it peak out? Back in May. And it just hasn't been doing well. The lows are getting lower. It broke the 50-day moving average. It couldn't even rally to the 50-day moving average when tech stocks and the Dow flirted with the 50-day line, and Nasdaq and the S&P are already above. Couldn't even get anything above the 50 days below the 200-day. This thing is a dog, and I think we're going to go lower, and I think we're going to revert from the 73 all the way down to the $70 level over the next couple of days or weeks. And lastly, Prosperity Bank Share. Bank stocks, it's going to be very, very tricky with bank stocks. Bank stocks should do well. But I mean, this stock, look at this thing. Bank stocks should be rocking and rolling because financials are going to go higher if interest rates go up. But look at this thing. It hasn't done anything. And again, 200 days above the 50-day. The 50 days is below the 200-day. Price action is below the 50-day. Classic pullback. And the highs are getting lower. I would sell it right here at the 67 level and cover it right at the $64 level. So you've got 𝗧𝗴𝗀, you got Merck, and you got Prosperity, and you got a lot of Fed data. As far as the biggest reports of the week, definitely GDP. Definitely GDP. Don't look for a lot of volatility or trading range on Wednesday. Ahead of the GDP, GDP is the biggest report of the quarter, and it's going to reflect 80% on retail sales. But I'm glad we're going to see consumer confidence ahead of that because consumers make up about 70 to 75% of all retail sales. So I like the fact that we've got consumer confidence ahead of the GDP. Jobless claims, unless it's going to go to 400,000, just not too concerned. Personal income has been rocking and rolling. Manufacturing activity, construction spending, this is really important to see how the bottlenecks and inflationary pressure is impacting the supply chain on an industrial level, on a basic material level. So we're going to have a good idea this week of how home sales are doing, retail sales, overall economy, consumers, how they're feeling about the economy, and whether construction and durable goods material is getting higher. It's going to be a really solid week for Fed data. And remember, it's still a choppy market. I mean, look at this. This is a choppy market. Anytime you have the Dow Jones, anytime you have the Dow Jones below the 50-day moving average, that's a choppy market. That's a twilight zone, and we can revert lower just as easily as we can revert higher. I know. There's certain signs that saying that's not going to happen, like the Nasdaq rallying, like consumer discretionary, and keep your eye on consumer discretionary. I'm going to tell you right now, if consumer discretionary breaks above these levels, there's a really good chance the market is going to make new highs. Because look at the market capitalization here. Amazon, Tesla, Home Depot, McDonald's, Nike, Lowe's, Starbucks, Target. Do you see the market? General Motors, O'Reilly, eBay, Dollar General. Do you see the market capitalization? Amazon makes 22% of this thing, and Amazon is like 22% of the market. I'm just kidding about that, but you guys understand what I'm saying. So keep your eye on consumer discretionary, and if you really want to be smart here, set an alert at the 185.70 level, and if it breaks that level, it's probably a good time to buy the Nasdaq 100 or the S&P 500. So all eyes on consumer discretionary, and in terms of choppiness, you've got 𝗧𝗶𝗺, Merck, and PB until the DIA. Once the DIA, the Dow Jones, once it starts trading firmly above the 50-day moving average, then I'll be less liberal with my shorts. But while we're in twilight zone, I'm going to trade both sides of this market like there's no tomorrow. And folks, before you go, you've got to pay attention to this. Pay attention to what I'm saying. I'm actually helping you make money, believe it or not, if you follow what I'm doing. Now, people spend countless hours each week scouring charts, trying to make sense of this crazy market. But what if traders could skip all the madness and tap into one of the most predictable forces in the entire stock market? Man, that would be something. I'm talking about a wiretap system that seeks out a specific setup every Friday at 3 p.m. Eastern Time, an hour before the market closes. No day trading. You're in on Friday at 3 p.m. and you're out beginning of next week. Imagine you got out on Friday. Today's Monday. You could be looking at a nice steady profit right now. New traders, seasoned veterans alike, they're using this system to jump in on Friday and cash out on Monday. Today could be your profit opportunity day. Want to find out how you can use the wiretap system on the weekend? Click on the link below and get all the details. Don't miss out. Click on the link below. Watch all the details and check out this wiretap system. It is cool. Very, very cool. You've got to get your hands on it. In this type of market, you need every type of edge that's available to you. And the wiretap is definitely that type of an edge. And by the way, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post new videos just for you. And keep your eye on the consumer discretionary sector. And there's 3 hot shorts for you: 𝗧𝗶𝗺, Merck, and PB. And I'll see you tomorrow. Bye.